All right, guys, so we're going live here. So let me get a quick sound check from everybody and we'll get started. Just felt like should do a little live stream tonight for everybody. I know it was a pretty, it was a bloodbath day, so figure sure, a lot of people probably out there looking for advice and questions and so on. So I want to do kind of an open forum here. I'm sure most of you saw the daily video today. So I'll reiterate a little bit of that, but mostly just want to do some Q&A for everybody. Hey, what's up, Frank? Yeah, they ate your honey. I see that. Sounds good. Awesome. What's up, Kevin? Shelly? What's going on? Um, Real quick, for those of you, because I know we've had some trouble with this in the past and people weren't sure how to do this, but if you're on the website and you're watching here, either click on the watch on YouTube on the thumbnail or just copy this link and put it in your browser, and that way you can see the chat box. I know some of you guys had problems in the past with not being able to see the chat box. You got to actually watch it on YouTube, so just copy that link there. Miranda, what's going on? Mike, Batman, what up? Gary, how's it going? Tesla, so that's a good question. I was actually talking about this with someone else earlier today, and it's like Tesla is like that stock that's like annoyingly strong, right? And if you look on the weekly, and I made this comment a few weeks ago actually, but this has actually got, I mean, this is a good weekly bullish inside bar on Tesla. So you got the power bar, a couple of inside weeks, and then a pop. Still can't get above that 50-week moving average right now, but this is honestly, outside of Apple, this is the strongest stock in the market as far as a technical position is concerned. I mean, Amazon's held up really well also, but that weekly rejection right there is not good. You lost all these pivots on the monthly close, but Tesla, I mean, this is if you're bullish, like this is probably your best chart. This and Apple. I mean, this is like I can't really even argue anything against that. There's nothing wrong with this pattern. And the thing is, a lot of those things, we talked about, the ARCs of the world. I've talked about XBI, how that's gotten down a double bottom. The high risk names, those are the first to go. Yeah, like Upstart. You know, what's another one? Roblox. These growth stocks. Palantir. DraftKings. So they were in a bear market in most of 2021, ARK especially. But you look at Tesla and like the bigger names are going to be the last ones to go. So you look how long it took Google, to really start fading, and Microsoft to really start fading. And last month I talked about how Apple was like, it wasn't even bullish that this is going straight up and vertical. So like you look at where Apple was in late June and look where it went in mid-August. And then you look at, like XLV, it had a decent rally. XLF, had a decent rally. You look at materials, XLB, home builders, all these sectors, right? And to me, it's like, this isn't bullish. Like Apple's a safety play, if anything, right? It's more, it's not the growth stock it used to be. It's more of a safety play. You look at Meta, like what's this done since June? It's actually made 52-week lows today. So Tesla, Apple, those are kind of the last behemoths to really go. And, you're just seeing that money flow right now. Now, I think Tesla personally is just being held up with the options market. I can't imagine, I mean, with Elon exiting, Elon selling, he says he's done. The last time he said he's done, he sold more. So take his word if you want to, but he's lied through his teeth, publicly many times. So besides that, I think if you were convinced the market was going lower, you're smart money. You're not buying shares of Tesla. That's not what's holding Tesla up. It's the options market. I think it's just gamma squeezing. I mean, this was the original gamma squeeze stock for what that's worth. So I think Tesla, that's kind of the reason there. But that is a really good question, and I thought of that myself today. But you look at, ARK, and usually I like to use Tesla for a gauge of risk. But you look at ARK, and this was soft all day long, although it didn't really sell off as hard as the rest of the market towards the end of the day. Um, you look at the semis, they were very weak today. So, and the Russell too. And the Russell's been outperforming lately, but today it got pounded. So, um, usually when Tesla outperforms, I take that as a bullish sign, but I think more so it's just the last one to go. And there's also, there is OPEX stuff going on as well, which leads me to believe that, and I said this today in the videos, if we don't gap down tomorrow, by the way, after hours, it's 7:35, so the after hours will close in 25 minutes. So we're at 122 million shares on the spiders, including after hours. So that is the biggest since right there. So that would be June 13th. So that was basically the panic lows. That was 170 million, including after hours. We're at 120, almost 125 now. So a lot of shares coming in there. But again, the bigger names are kind of the last ones to go. The thing is, though, it is OPEX. So unless we gap down and have a huge, like this type of 3 black crows scenario, I think we actually kind of recover and just chop for the next couple of days. I wouldn't rule that out. The only other thing that makes me think that won't happen is if we get news. And there's a legit case for that to be made. When big money sells like this, a lot of the time what'll happen is there's, news will come out a day or two later. Remember in February 2020, they started dumping it right towards the end of OPEX week, but somebody clearly picked up the volume right there, and we had that dump. We know there was insider trading going on there. That's a fact. And then even back here, the CPI came out here, and somebody around 2:30 just decided to market sell everything. So that could be a thing. I know it did come out later, around 2:30 that the U.S. is weighing putting sanctions on China, but I don't think that's what caused the sell-off in the second half of the day. You already had a bear flag going, and it's not like there was a big volume spike with a huge candle, like an algo freak out. So it wasn't that news that drove this down. This was like a controlled dump. So either way, big sell-off here. But yeah, I like that question about Tesla, though. Let's see what we got here. Yeah, son. I mean, to me, the bull market in crude, and some people probably thought I was bearish on crude because I kept saying, like, don't buy it, don't buy it, don't buy it, but I wasn't. I just, like, I can't chase something that's parabolic up here, and parabolic things always come back down. And even in here, I mean, this was just kind of more of a retest. This wasn't good enough of a correction. This was just kind of a retest, and I'll show you why it wasn't good enough of a correction. But I mean, you just see. So here's where you were right there. Look at where your 20 moving average is. You're still way too extended. Now we're into that 20 month moving average. And what else you got here? Isn't that where you broke out from? And take a fib. Oh, there's a 382. So you got multiple reasons. Now, I wouldn't rule it out. I wouldn't rule out oil, heading down to those low 70s areas. I wouldn't rule that out. But if, at the very least, this is going to give you a good bounce, which we already took, and we already made money off of it. So we already, locked in a gain on that first half of the UCO. And if this ends up being the bottom, we can ride it for a long time, and then we can sell it, and we can just buy dips. If it ends up stopping us out and goes lower, fine. I'll just load up a bigger position. So, and I don't think anybody in here is arguing. I mean, I'm pretty sure we all agree that the fundamental case for oil right now is ridiculous. So, but yeah, I mean, that's kind of the thought process there. And then gold, again, I still wouldn't rule out if we have a panic in the market. Yes, gold can dump very quickly, but I showed you guys this in the members video the other day, but the miners typically bottom first, And even if this does dump out, I mean, like when it stops, it'll stop. This was a 38% candle. So, you opened, the low was 16.18 and the high was 23. That's 38% in one day. So these things can bottom and they bottom fast. But that's another reason why I'm kind of just inching in, quarter position here, half position there, that type of thing, because this market's fast and it's furious. I mean, I knew that we'd get a bounce off 390. That's why we went long the SPXL, but it kind of took a few days, didn't it? And then it just kind of took off. And it got into a resistance zone, but it was like, I'm not going to go all in here because, I mean, you just had a nice rally. Who's to say it can't go higher? What if the CPI comes in at 7.8 and the market gaps up to 420? So it's a tough market to navigate, but, again, that's the thought process there with the metals. I really like the level on silver. I've showed you guys that. There is a chance this could go lower, though, but it's not going to get below 16. And I can't see that happening. But it's had a nice move off the lows. This is how you want to see it react off of that level. And speaking of other positions, I know you guys know I have Newmont, and this is a public video. Not everybody knows all our positions, but that's a pretty good reaction so far off that 100 moving average on the month. And that's where our support area is. So it's starting to shape up. Yeah, thank you, Batman. Yeah, give the video a like, please. Thank you. Love it. How did I start trading, Matt? Good question. I played that. I'm sure all you guys did it. That stock market game you play in high school, in like your econ class, and I did really well in that. And I think I was in like first place for a long time. I think I finished third place, but I bought Google. I mean, I had no idea what I was doing. I bought Google. This is like 2005 or something like that. I bought Google, and Google just ripped up like that whole year. And but I just thought it was very interesting and how you can kind of like just make money using your own money essentially. And the idea of being financially independent appealed to me. I've never really liked being a worker. I never wanted to work for anyone else, and although I've done it, but and then I came of age right around 2000 when 2008 happened, the global financial crisis. So I was like just going into like I was just graduating high school like right before that pretty much. And so that got me into economics, and then that got me into this, and one thing led to another. But yeah, that's pretty much how I got into it. Yeah, PPI, that's another thing. Like that's probably Elliot, that's PPI is extremely underrated as an economic indicator. I know big money doesn't look at it that much. Um, but PPI, remember, if you remember back in last year, I believe it was March. Yeah, it was somewhere around here because yields started to push up around March last year. But PPI was the first one that really broke out, and it caused the market kind of to freak out a little bit. But then it was like, oh, it's just PPI, and then inflation is transitory. But PPI was the first indicator that really of inflation that it was getting out of hand. So yeah, PPI is very important. CPI can lag. I have to admit, I'm surprised that we had a hotter print this month. I thought that my scenario today was it comes in, so it's 8.1 consensus. I thought we'd come in at 8% flat. So a cooler than expected number, but not by much. And then I thought we would gap up on that, and then I thought we would sell. I didn't think we would sell this hard immediately. I thought it would take a few days, but um, I didn't think we'd come in that hot because copper's come down, oil's come down, silver's at the lows, wheat's come a little bit off the lows, but not a lot. Soybeans, they're basically steady. Corn, that's come up a little bit, but you got to figure this isn't factored in this recent run. So I thought we'd come in a little bit cooler, but hey, it is what it is. That's the number. Yeah, no, I definitely think we revisit the June lows. I'm expecting much lower than that. Um, but I mean, I definitely think at this point, especially if you take out this pivot, we're definitely going to 375, 378 on the spiders. Like that's not even a question in my mind. But I do think we revisit the lows, and I do think we eventually take them out. I don't know if we do them this year, but I do think that does happen. By the way, there's also I haven't really covered this much. I know some other people have been watching this, but this trend line here is pretty good too. So we'll see if that breaks. That could cause a little bit more selling, maybe some algo selling or something. So we'll watch that as well. But if this 390 area, it breaks 388, we're going to that gap right there. And it's also a 7.5. So your 7.5 retraces, well, 380. Right, so 380, 378. And I mean, normally I would say like, oh, you know, we sold off, it's OpEx week, but so you got to take it with a grain of salt. But this is a power sell, guys. Like this isn't, you know, if we were down 2% today, I'd be like, okay, that's par for the course for this year. Like that's normal volatility for this year. But this is a door slam move, and look at the volume there. That's serious selling. And I showed this in a daily video today. Look at that futures candle. I mean, holy crap. Look at the volume there. Look at the size of that. By the way, that's really the most volume. Let's see what this was. 3.1, just over 3 minutes. So this is the heaviest volume on the futures since January 24th. So there was big dumping going on. Let's take a look at INTH. Notice that, oh, is that the right symbol? Tal? Let me know. Type that in because I don't think that's the right. I definitely don't think that's anything. So I do like MACD and RSI. I do. I look at them from time to time, but I don't. I'll never base a trade based off of them. Like I'll never say like, oh, the MACD is doing this, so here's one factor, and then here's the MACD. I need to see. You know, I just use my proprietary techniques, but as actual factors. But I will use RSI and MACD. I will use it. In fact, for those of you guys who have been with me since the beginning, I actually have this saved because I save stuff like this. But I was following that MACD divergence with the Qs and this channel right here all throughout 2021. And I said, you know, we keep making lower highs. I said, as soon as this breaks, this like wedge here, it's probably over with. And of course it was. So I definitely do use them from time to time. Another thing I like RSI for, like again, I don't use it a lot, but can't think of a good example right now. But like sometimes, like if you get a like a stock that's really overbought, like stupidly, or a sector that's really overbought, sometimes I'll notice like, okay, the RSI, every time this stock gets above 83, you know, it sells off. And I'll kind of like make a mental note of that. And I'll look, okay, this stock every time it gets 83, you know, that's where I'm looking for. So, I mean, like I do use them. I just don't, you know, I don't, it's not a main part of my analysis like some other guys use. But I do use them. I do like them. Head and I don't see one currently, so unless you're looking at like right. Oh, I see what you're saying. You're talking about like just the spiders. You're talking about like this. I mean, that's, you could make a case. I mean, I guess that's valid. I'm just not in love with that left shoulder because it's so small. But I mean, you could make a case. Either way, here's what I would do is look. So Your high is 431, your low is 390. That's 41 points. Just take a, measured move. If this breaks and it confirms down, then you got a measured move for 40 points, which takes you to 350. But yeah, I mean, it could be. It's just a little tight. That left shoulder is a little tight for me. But yeah, I mean, we'll definitely keep an eye on that for sure. And let's see. Wow, sand was green. Did they have news? You know what? I know you guys, most of you guys know Jason Burek. I follow him. I know he just released a new Patreon article, and it had to do with royalty and streaming companies. Oh, I got it on my phone here. I think that was, oh, that was a specific, okay. I think there, oh, maybe it had to do with Franco-Nevada. Okay, so Franco-Nevada did some M&A stuff today, apparently. Maybe it was getting a bit off of sympathy there. Yeah, because there's no news on this wire here. But that is, that's interesting. That gapped up with volume, you're right. We'll keep an eye on that. UAU was negative today, so was FNV. Yeah, I would keep an eye on this. Let's put that on the radar here, because I can't imagine this has a lot of short interest. Let's see. I'm going to check really fast. Yeah, it's not as it is a little bit of short interest, but nothing significant. So this is probably not short covering. The weekly. Yeah, we'll keep this on the radar. That looks good. Yeah, that volume's definitely catches my eye there, especially in a market that got bludgeoned today, especially with GDX down and GOAU down and FNV down and Royal Gold down. Yeah, definitely interesting. Good catch there. Gaps filling. So Henderson asked about the gap. Yeah, I mean the gaps filled. I mean, the thing is though, it like this obliterated the gaps. It's not like we stair stepped down over a couple of days and then we filled the gap here. Like this thing just it gapped down in filling. Actually, didn't even fill this gap. It just gapped below it. So I mean, this thing just blew it out. So, when you come into a gap fill, I'll use the spiders because they have the gaps on them. But like when you come into a gap fill, like right here. So here's a big gap. And then it kind of took like 6-7 days to fill the gap really. Like that you can expect, like, okay, there's going to be a reaction there. But this was 1 day. So that tells you there's major velocity. I don't expect those gaps to really have, like, anybody who tried to buy those gaps got wiped out today. So I don't really like make the bullish case off of that, if that's what you're asking. You bought, nice, you bought Polaroid? Yeah, that's good. I don't even know, did they get, are they part of some other company now? Yeah, I had Google, and I want to say it was like 2006 or 5, and it just, this is 2000. It was just, it must have been 5 because this is just, it just powered up, and that was like my biggest holding. I just remember that. I don't remember what else I had, but that was my biggest holding. Yeah, let's look at Neo. Oh, interesting. Oh, you know what? I'm gonna try something. Okay, so this is interesting here. So what did we talk about earlier with Tesla? It's holding up much better. Neo is holding up really well too. Let's take a look at XPEV. Okay, that looks like crap. Rivian though is actually holding up okay. It's making higher lows. I wouldn't be surprised if we get some type of another EV bill or something like that. Now that I'm looking at this, because Neo actually looks very strong to me. I wouldn't say very strong. I guess that's kind of a stretch, but relatively speaking, here's your low in May. You did come down here and kind of take out these lows, but 1, 2, 3, 4, 5 days up versus the spiders that got blown out today. And this was green in a down market. That's definitely interesting to me. It catches my eye. I wouldn't do anything with it here, but I would give it an upside. I wouldn't say upside bias either, but I would give it like the benefit of the doubt, I'll say. Very interesting. So the other thing I just looked at was solar, tan, and this is holding up really well. Bullish inside bar above the moving averages. Trend is up on the weekly. It looks like accumulation in these in the ESG kind of sector. So maybe that kind of explains Tesla's relative strength more so than anything. That could definitely explain that. Let's look at GM and look at GM. So this is like GM, all these automakers are going to be basically forced to convert to EVs because of carbon credits. It's basically like if they don't convert, they're throwing money away. Ford's actually, look at that. Look at that pattern there on Ford. That's a bullish pattern. So very interesting. Yeah, I wouldn't do anything with Neo if you own it. I mean, I don't know what your entry price would be, but I'll say it's definitely got relative strength. Definitely has relative strength. Interesting. We'll definitely need to keep an eye on that. I'll be looking at tan a little bit more often now. Let's look at oh, what's it called? Jinko. Yeah, Jinko's holding up okay. First Solar. Yeah, look at First Solar. Holy crap. This is a little long in the tooth, though. Anyways. I short individual stocks, but more so, I try to stick to indexes, indexes or sectors. So, you know, I'll short like, let's say the semiconductors or something like that. And the reason I do that is just because, especially in a bear market, there's single stock risk. So think about Carvana. This is something that we abused like 3 times in the past couple of months to the long side, and basically the thought process there was 50% of the float was short. And so when you get these stocks that are so beaten down, there's a lot of things that can happen. There's short covering. I mean, this thing is up, you know, it went from sub 20 to $60 in a couple of weeks. You have stocks like Peloton that become buyout targets, and you know, you can get on the wrong side of that and they can rip your head off. So you got to be careful with that. If I do short an individual stock, it's going to be something safe, like something that's not, like I wouldn't short like Meta. And even though I think Meta can go lower, but the reason I wouldn't short it is like, look at how beaten down it is already. Same thing with Netflix. I just can't short it when it's this beaten down. But I would short something that's like in the middle of the road, if that makes sense. But I typically try to stick to sectors just because you don't have to worry about single stock risk. You don't have to worry about earnings either. Like, you know, you think you have a great short, and then all of a sudden they go into earnings and the stock gaps up, you know. So I do try to stick to the ETFs, and I do that in general, even in bull markets, just because I don't like to trade around earnings. So there's that too. But I do trade a significant amount of single tickers, but I do like the ETFs though. What do I expect immediately after the midterms? I think we probably bottom around sometime in November, especially if we're down big. And by bottom, I don't mean like a long-term bottom. I mean a good tradable bottom. LNG. Okay, so that's what you're looking at. Let's see. For short. Well, here's the problem. Let me just take a look. I'm not sure what this company does. Hold on. I'm just going to look it up really fast. But the first thing I'll say, this stock is extremely strong in a weak market. Okay, so it's a pharma stock. Okay, like a lot of these pharma stocks are holding up really well. MCK. If you're going to short this, I would prefer you do it with like a leap put option or like a really small position. I don't have anything. I could do some work on this and probably come up with some numbers here, but this is holding up. Like, look at this, $29 a share, and it's at 84 right now versus the SPY, which is down over 20% on the year. So that's one thing to consider there. But if I could find a technical reason to short it, I would, but I don't have the time to do it right off the bat here. But if you want to short it, do it with leap puts or just use a really small position. Yeah, Jerry. So with the pot stocks, the thing is the Republicans are actually getting on board with marijuana now. In fact, the most recent decriminalization bill was brought on by House Republicans. And back in January, I kind of predicted that this would happen because the Democrats knew that they were going to be in trouble. And I don't want to get to a political discussion here, but just for face value, the Democrats knew they were going to be in trouble in the midterms. What's one thing that they can dangle as a carrot? Well, it's marijuana legalization. If the Republicans are smart, they jump the gun on that and they take that away, saying, hey, well, we're going to legalize it, so you got no reason to vote for them. So if you have bipartisanship support, that really is kind of a power play for the stocks. And I don't know if you guys have noticed, but this administration is doing legislation almost every week. It's just a matter of time before they get to that. So that's something to consider. Another thing to consider is the way that hedge funds work is like all these guys are short. Like this is very much the same as GameStop, maybe not as egregious, but they're overwhelmingly overloaded, overweight short these names. And going into the election where you know that they're gonna, like, it could be, maybe it's only a 1% chance that something happens, but it's a chance. If you're a hedge fund manager, you can't afford to get your caught with your pants down, so they have to hedge to the upside before that happens. And that's pretty much what happened in 2020. It happens ahead of earnings all the time. I see it with these stocks all the time. So there's a case to be made for that. Now, I'm not saying put all your money into it and, small positions are fine, but I still think that case is to be made. The Fed, do you think that they'll absolutely tighten too much? Absolutely. That's a guarantee. That's a guarantee. When's the Fed ever done anything right? So, and by the way, let's flip over here to trading view. So here's the Fed funds rate. That's sitting at 2.33 currently. Okay. 2-year Treasury is at 3.74. So they still got another 140 basis points to go. And the 2-year just hit a 14-year high today. Actually, no, 15. Yeah, 2002. So yeah, 15-year high today. So Fed's got a long way to go still to get to that 2-year. So yeah, they're definitely going to over. Now, I think they should just get it over with and just blow it up tomorrow or next week. Just go straight up to that 2-year yield. But they probably won't do that because they don't know what they're doing. Yeah, I mean it's got to be at least 75 though. Um, it's an interesting question, Anna. So the difference between mass panic and everyone being on one side. So mass panic. This is going to be tricky. This might be too long of a discussion for here, but if you ask me that question again and kind of like give me a more of a specific example, like are you talking about like where we are right now versus June? Because there's a lot I can dig up into that. But basically, the thing is, like a lot of traders don't understand that there can be quote unquote too many bears. Like one of the things I kept hearing right around here was like, oh, there's too many bears. They're calling for a crash, 2008. But the thing is, like people, we get onto Twitter and you know, we get into this little like zone of here's all my people that I follow, and all of them are calling for a crash. Well, traders represent like 10% of the actual stock market. So back here, you got to figure traders, traders and smart money was probably buying here or covering shorts. The average investor, there's a difference between the average investor and a retail trader. The average investor was probably crapping their pants right here. And they were too afraid to buy the dip. Now here, you got people saying, "Oh, there's too many bears." It's like, are there though? Are there? Because I'm still seeing, you know, commercials for cryptocurrency. I'm still seeing, um, you know, like Apple near all-time highs. There's, we're not seeing complete. The bottom will be in. I'll put it this way: the bottom's in when people like when you're made fun of for buying stocks. Like people aren't scared enough yet. And really the VIX is kind of proof of that. Like we're not even, this is nothing. This just means there's increased volatility. Yeah, the Qs they're definitely the weak one. That's why I've been attacking them all year long. I've been trying to be more short the Qs than anything. Because rates, I mean, the fundamental case makes more sense anyway. I mean, rates up, but just de-risking, growth stocks makes way more sense. Let's look at uranium for Marinda. I still like CCJ. I mean, this is doing so well here. Down 50 cents in an up market today. Trend is up on the daily. Trend is up on the weekly. This is a very strong trend. Good spacing and moving averages. It probably needs to. It definitely needs to do some backing and filling, but there's nothing to say this can't push higher. And this is really, I think CCJ is a better. Uh, it's a better vehicle than spot uranium even. Like this is where the liquidity is. So, but URNM's good too. The only thing I don't want to see here is I don't want to see lower highs. So I want to see it make a higher high here eventually. But looks fine to me. Uranium looks great to me. I like uranium a lot. And then aluminum, good old aluminum. This one's kind of harder to see. See, I haven't looked at it in a while. Yeah, see, aluminum's getting hit a little bit here. If it doesn't hold 200, it's going to go to 175, and that's where you'd want to buy it. But the thing is, with aluminum, it's a lot like copper, so it's a base metal, so it's going to be a little bit more sensitive to recession, which means that if we have this type of CPI print and the Fed hikes heavily, the market has to look ahead to recession, right? So that's going to put a little pressure on this. I would prefer to see it not take out that low. I don't like that. So I think it probably 180, 175, that's where you want it. You got a lot of support there. Like a ton. And I mean a ton. I'll buy it there myself. Yeah, 250, 255. There's also, well, it's not even valid anymore, but there used to be a head and shoulder pattern here. Right there on Tesla. They had a target of 258, but it ended up failing, so. We could be in for a messed up scenario where Tesla, holds up and bids up and the EV stocks bid up and the rest of the market sells off. I mean, I wouldn't even rule that out, honestly. Or everything will go down, but this would hold up better. It would be the better way to say that. I use Thinkorswim, which is TD Ameritrade. The thing, Elliot, though, there was a lot of people buying puts already. So a lot of those, I think a lot of institutional money was already like hedged. I don't know if we'll get margin calls tomorrow. I don't think so. Unless we like gap down and really start to pump. But like I said, there's a lot of institutions like hedging is at a really it's at a high right now. If you look at the skew index, um, this is, I mean, it's got a nice little uptick there, but it's at the lows of the year pretty much. So there's a lot of hedging going on. So I don't think we'll get margin calls right now. I mean, who am I to say? I'm not going to rule it out, but exactly, David. So that's really it. And I've been on here saying that same thing. We can the everybody who thought that like, oh, the lows are in, and the Fed, we got an 8.6% CPI, so it came down, which means the Fed's going to pivot. It's like you guys are like the market's in dreamland right now. Like they're not going to pivot. They're not going to pivot with anything less than 4. I would say 4% is probably the new floor for them. The problem is they won't be able to print like they used to. They won't be able to do 100 billion a month. They'll have to nerf it, and it'll be like Japan, where we're kind of just like we're doing a little bit here, enough to keep the market afloat, but we won't be able to dig us out of recession. So it'll be enough to like save the worst case scenario, but we'll have probably grindy stagflation for a long time, which really kind of sucks. Yeah, I mean, yeah, exactly. And I guess it is contrarian to be bullish right now, but again, you got to figure though, you know, the average investor though probably isn't, like the average investor hasn't sold long-term shares yet. They'll sell at the bottom when it's going straight down. But I can just I can just tell you guys right now, like this. This right here was not a bottom. It never was. You never had capitulation. We never had VIX spiking. And we never had a V shape. Like if you go back to every crash, every bottom, to 2018, 2011, 2010, 2009, 2002, 1987, all of them, every bottom, it's heavy volume, like 300 million shares, and it looks like this, like that. And then you get a pull, and then this was, I mean, you went up for a few days, and then it took you a month to break out. No, 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 that's not a V shape. That's not a V shape. Yep, absolutely. Yeah, and and like Japan is came out and said like, hey, we're going to be getting back in. It's more countries are going to do that. They don't have a choice. They backed themselves into the corner. They backed themselves into a corner here. Yep, HYG. The only thing that keeps me from shorting this is again, it's already so far down. I'm not saying it can't go lower, but I can't. What if the Fed does do a micro pivot, even something like that, could make this thing, surge up. It's just too down on the chart for me to do that. And that's just not really my style. I'm more like I want to be shorting up here when we're into resistance and buying when we're into support. I don't like to short breakdowns or buy breakouts. It's just not my style. Not that HYG is like doing either of those things right now, but it's just so low on the chart. It's hard for me to get into that. But there's other ways to play short rates. I mean, you can do TBT. That's an easier way. It's a little bit more stable too. Yes, Anna. I don't know if you were with me earlier, but I think we'll bounce around November, and I think we rally into March. Yeah, and Mac, that's the thing though, and I kind of said this a minute ago though. Like the thing is with those puts, if anything, I think they just park us right here because this is major dumping. Like this is serious volume. And this is on the SPY too. So like it's not the futures. Like this is where big money parks their money. They're dumping big money here. Um, I just if we were down 2% today, I would say who cares? But we were down 4.5. That's a big move. Like we're doing technical damage here. We're about to do technical damage. Yep, exactly, Jerry. Yep. That's what I think it's going to be. It's going to be up and down. And I think we're going to have a trader's market for a while, which is really good for us. But yeah, it's going to be a rough go for the economy for sure. Okay, well, probably going to wrap it up here. Yeah, I just wanted to get a quick little stream in. We've been going about 45, 50 minutes now. So yeah, I just want to get a little Q&A for everybody. Really good discussion tonight. A good time. We'll see what we get tomorrow. I mean, I wouldn't rule out a bounce here, but I think tomorrow we at least test lower prices, maybe 390. And then maybe if we bounce, it'll probably be a little bit of a dip, and then we'll get a tail candle. And then we'll get some chop into the end of the week, I think. But and like you were just saying, Mac, I mean, like that does, because it's OPEX, I mean, that's kind of the thing that is keeping me from saying we'll have a gap down and a flush. But if there's news, if there's something bad happening that someone knows about, I wouldn't rule it out. I just wouldn't rule it out. But usually it doesn't work that way. Usually it does. But this has been a surprising year, pretty much all year long. So, hey, if you know what to say.